Hello investors, welcome to my YouTube channel, where I study the best investors and businesses from around the world. In this week's video, we'll go over the story of the Dutch Tulip Bulb market bubble. So without further ado, let's get started. Today I'll be covering these two parts in this video. 1. What are Dutch tulip bulbs? 2. Why did people get so swept up by them? 3. What was the reaction of the public and the stock market? 4. What are the lessons we can learn from the Dutch tulip bulb bubble? So let's get into part 1. What are Dutch tulip bulbs? The tulip, a flower native to Central Asia, caused quite a stir when it arrived on European shores in the mid-1500s. As we see here, the color patterns created by a virus attacking a tulip can be stunning, but the virus also weakens the tulip and makes reproduction difficult. Here's another image of a Dutch catalog of 1637. Here, tulip known as the Viceroy is shown. Its bulb could be purchased for 3,000 to 4,200 guilders florins, depending on its weight. Just to have an idea, at that time, a skilled craft worker earned around 300 guilders per year. Tulips are reproduced through seeds and buds and grow from bulbs. After 7 to 12 years, tulip seeds will produce a flowering bulb. When a bulb matures to a flower, the original bulb dies, but a clone bulb and many buds emerge in its place. After a couple years of proper cultivation, these buds will produce flowering bulbs of their own. The tulip-breaking virus spreads solely through the buds, not seeds, and the virus substantially slows propagation. As a result, cultivating the most desirable variety at the moment takes years. To add to the rarity, these tulips bloomed for roughly a week in the Northern Hemisphere in April and May. Number 2. Why did people get so swept up by them? Early stock market bubbles and crashes had their roots in socio-political economical activities of the 17th century Dutch Republic, the birthplace of the world's first formal stock exchange and stock market. The Dutch Republic's economic, business, and financial systems were the most advanced and complex in history from the early 1600s through the mid-18th century. Merchants from Amsterdam were at the heart of the rich East Indies trade, where a single voyage might return a 400% profit. The first tulip bulbs and seeds were sent to Vienna from the Ottoman Empire from Ogier de Busbecq, the ambassador of Ferdinand I, Holy Roman Emperor, to the Sultan of Turkey, who sent the first tulip bulbs and seeds to Vienna in 1554. It was no surprise then that tulips became a luxury commodity reserved for the wealthy's gardens. Being without a collection of tulips was considered a sign of poor taste in any man of money. Following in the footsteps of the wealthy, the merchant middle classes of Dutch society tried to imitate their wealthier counterparts and requested tulips as well. Initially, it was a status symbol that was purchased precisely because it was expensive. Tulips were regarded as notoriously delicate. They could not be transplanted or even maintained alive without meticulous treatment. Professional growers began to perfect strategies to cultivate in the early 17th century. Here's an image of a painting called The Tulip Folly by Jean-Léon Gérôme in 1882, where a nobleman is depicted guarding an exceptional bloom as soldiers trample flower beds in an attempt to stabilize the tulip market by limiting the supply. The craze was augmented as the Dutch learned that tulips could grow from seeds or buds that grew on the mother bulb. A bulb that grew from seed would take 7 to 12 years before flowering, but a bulb itself could flower the very next year. So-called broken bulbs were a type of tulip with a striped, multicolored pattern, rather than a single solid color that evolved from a mosaic virus strain. This variation was a catalyst, causing a growing demand for rare, broken bulb tulips, which is what ultimately led to the high market price. In 1634, tulip mania swept through Holland. A single bulb may have been worth as much as 4,000 or even 5,500 florins, since florins were gold coins of varying weight and quality in the 1630s. It's difficult to make an accurate estimate of today's value, but academics have approximated that the greatest tulips can cost upwards of $750,000. The tulip trade had become so popular by 1636 that regular marts had to be established. Number 3. What was the reaction of the public and the stock market? At the time, professional traders known as stock jobbers joined in on the action, and everyone looked to be making money simply by possessing a few of these unique bulbs. It looked that the price could only climb, that the tulip fever would never die. People began buying tulips using leverage, utilizing margin derivatives contracts to purchase more than they could afford. But just as quickly as it had begun, it ended shortly after. Prices had begun to fall by the end of 1637 and had never looked back. People who bought bulbs on credit in the hopes of repaying their loans when they sold them off for a profit played a big role in the precipitous drop. However, as prices began to fall, owners were driven to liquidate, to sell their bulbs at any price, even if it meant declaring bankruptcy. Nobody realized that they were betting everything on a piece of greenery with no intrinsic value in the midst of the excitement. Dealers refused to honor contracts, prices plummeted, and consumers were left with an abundance of lovely flowers that no one wanted. Despite the fact that the Dutch economy did not collapse, many who speculated and engaged in the buying and selling of goods and services became impoverished overnight. Growers gave them different lofty titles like Admiral of Admirals and General of Generals, which were drawn from Alexander the Great or Scipio. The naming of variants was random, and the quality of the varieties might vary greatly. Now the majority of these types are now extinct. Here is a graph created by the author Earl Thompson for the standardized pricing index of tulip bulb contracts. Between February 9th and May 1st, however, since Thompson had no pricing data, the shape of the fall is unknown. The tulip market is rumored to have crashed in February. With time, professional producers paid more and higher prices for virus-infected bulbs as the blooms became more popular and prices rose steadily. Speculators began to enter the market in 1634, partly as a result of French demand. Throughout 1636, the contract price of unusual bulbs continued to grow. During the winter of 1636 to 1637, tulip fever peaked, with some bulb contracts apparently changing hands 10 times a day. Because tulip bulb contract prices dropped precipitously in February of 1637, no deliveries were ever made to fulfill any of these contracts, and the tulip trade came to an end. It is said that when tulips arrived in the Netherlands, the entire world went insane. For example, a sailor was charged with a felony and sentenced to prison after mistaking a rare tulip bulb for an onion and eating it with his herring sandwich. Semper Augustus, a bulb known for its flame-like white and red petals, sold for more than a mansion in a posh Amsterdam neighborhood, complete with a coach and garden. Speculation exploded as the tulip market grew, with traders offering exorbitant prices for bulbs that had yet to flower. The tulip market then imploded, as any financial bubble does, leaving traders of all income levels bankrupt. People have a tendency to become attached to things that later cause them problems. They spend a lot of money on something that has no merit. The desire among the Dutch to possess tulip bulbs became so strong in 1634 that the country's normal industry was neglected, and the entire population, including the lowest ranks, became involved in the tulip trade. As the craze grew, so did prices, to the point where in 1635, many people were known to spend a fortune of 100,000 florins, Dutch currency, on 40 tulip roots. Tulips became so expensive that they began to be sold by weight in parrots, which is less than a grain. The future contracts evolved in tandem with the increase in trade volumes. This was a significant financial breakthrough at the time. It became possible to trade tulips without having to own them. The derivative markets grew at a breakneck pace. 90% of trades were taking place without actual ownership of tulip stock at the height of the mania. Tulip futures were eventually joined by tulip options. It was now possible to trade bulbs in fractions. Poorer investors were able to avoid the denomination issue as a result of this. A poor investor might not be able to afford a whole bulb, but he or she might be able to afford a fraction of one. The tulip futures and options were the first to be traded on the open market, and they were the result of tulip mania. A single rare bulb cost 10 times the average skilled worker's annual wage during the peak of tulip bulb mania. Some investors took out loans and mortgaged their homes in order to make quick money from tulips. Some people started selling their farmland and jewelry to put their money into tulips. Bulb prices were skyrocketing, and bulb trading was exploding. In a matter of days, a wealthy merchant could invest 10,000 florins in bulbs and resell them for 20,000 florins. The market began to be driven by this buying frenzy. Many futures contract investors never touched a tulip bulb, and some didn't even know what a bulb was. When the Dutch government realized that the tulip mania had reached uncontrollable proportions, they intervened and began to regulate tulip sales. Tulips were also being planted locally on a large scale in Holland due to high demand for the flowers. Even before the harvest, an increase in supply would put downward pressure on prices. Why? Because the agents calculated that the harvest would outnumber the demand. The traders were a little alarmed by this. A few worried merchants decided to take profit and began selling their stock in large quantities. Smaller investors were also frightened by this rapid price correction. This resulted in profit booking, which quickly led to a crash. In February 1637, the tulip price reached its peak, and the bubble began to burst. In just 6 weeks, the price of tulip bulbs dropped by 90%. Because everyone wanted to sell bulbs, and no one wanted to buy them. The market volume plummeted. Bulb owners eventually couldn't sell their bulbs for even a fraction of their purchase price in the spring of 1637. Futures and options contracts were widely dishonored. Tulips were traded on the exchanges of many Dutch towns and cities by 1636, with 40 bulbs selling for 100,000 florins or Dutch builders, or 1,000 times the price of a pound of butter. Charles Mackay wrote about the 17th century tulip mania, during which a single tulip bulb was exchanged for a basket of items worth 2,500 florins, and many people became wealthy. People came to the marts like flies around a honeypot, he added, since a golden bait hung temptingly out in front of them. Everyone assumed that the tulip craze would last forever, and the wealthy from all over the world would send flowers to Holland and pay whatever prices were demanded. The wealth of Europe would be concentrated on the Zuiderzee's coast, and poverty would be eradicated from Holland. Tulips were grown by nobles, townspeople, farmers, craftsmen, mariners, footmen, maidservants, and even old-clothes women. Tulip traders were unable to locate new customers ready to pay ever-increasing prices for their bulbs by 1637. Tulip demand fell when this realization sunk in and prices plummeted. Some people were left with tulip contracts worth 10 times what they would have paid on the open market. Anxious tulip speculators sought assistance from the Dutch government, which replied by proclaiming that anyone who had purchased future bulb contracts might void their contracts by paying a 10% fee. There were attempts to address the matter to the satisfaction of all parties, but they failed. Individuals stuck with the bulbs they held at the conclusion of the crash stopped the craze. Judges regarded the debts as gambling and hence not enforceable by law, so no court would demand a payment of a contract. When hyacinths were introduced in the 19th century, they quickly displaced the tulips as the most popular flower, and tulip prices skyrocketed. Like today's tulip bulbs, the prices of the flowers began to plummet as people became accustomed to them. A small batch of prototype lily bulbs was recently sold for 1 million guilders. The actual victims of the change in law, according to Edward Thompson in his book Tulip Mania, were investors who purchased contracts before to this date. The law amended the nature of these contracts so that if the current market price declined, the buyer might pay a penalty and forgo receiving the bulbs instead of paying the entire contracted price. Number 4. What are the lessons we can learn from the Dutch tulip bulb bubble? The Dutch tulip mania has taught us some valuable lessons. Let's take a look at 4 that stand out. The first lesson is that markets are prone to irrational exuberance, which we must avoid. You must have seen people rushing to buy homes in a particular neighborhood, or a builder drawn in by the hype created about what a fantastic opportunity it is, even though it might not be advisable to do it. Don't get caught up in the euphoria, no matter how appealing it appears or sounds. Do not succumb to the herd mentality. The second lesson is that we should take a look at the basics. Determine the value of the product or asset you want to purchase. Something must have intrinsic value, which is derived from its usefulness, contribution to future value creation, and performance. There is something wrong if all 3 of these elements are missing. It's a good idea to consider the long-term investment potential. The third lesson is to keep a level head and don't let your emotions get the best of you. This is most likely the most difficult part. It's difficult to be rational when everyone around you is talking about the latest craze, news headlines are screaming about it, and news anchors are screaming about it. You'd like to speculate and accumulate as well. Why can't you do it if others have done it before you? If that's how you're thinking, you should probably go on a long journey to get away from that temptation, because that's not a good investment strategy. When you are overcome by strong emotions, you should never act. Speculators should invest in risky, short-term investments. The fourth lesson is to never join the rush. As the Dutch tulip bulb market bubble showed, it's best to resist the urge to join in the rush. Just because other people are investing doesn't mean you should follow suit. Waiting and watching pays off. Behavioral psychology, particularly that of investors, is a hot topic of research. If markets are irrational, it's because of the people who control them. Every market thrives on demand and languishes when there isn't enough. Because the information investors had about the future direction of tulip prices was mostly limited to what the public opinion on tulips was, investors inferred that prices would rise and bought bulbs when public opinion was favorable, and investors did the opposite when public opinion turned negative. This scenario exemplifies how information cascades can be useful in financial market analysis. It seemed unthinkable to most people in the 17th century that something as ordinary as a flower could be worth more than most people earned in a year. And although the tulip bulb was unusual in that it's centered on a plant rather than company shares or precious metals, nonetheless, it has a number of lessons for today's investors. It demonstrates how an asset bubble can be created by a combination of factors, such as prolonged economic growth, abundant liquidity, financial engineering, and a group of new investors. The 400-year-old Dutch tulip mania is proof that humans have always been greedy and have envy in their blood. The investors were greedy and wanted to get rich quick. The wealthy used to show off their tulip bulbs to make others envious. Gradually, the phenomenon devolved into herd mentality, and investors stopped questioning why tulip prices were so high. The financial innovations occurred in order to support the larger fool theory. Thank you for watching this video entirely to the end. Nothing helps me out more than y'all sticking it out in the end. We have a new Substack website where there's a detailed write-up of this video and 2 deep dives are posted each week. Please consider subscribing to my Substack and this channel if you haven't done so already. Also, if you enjoyed this video, please like this video and subscribe to my channel so that I continue to make videos like this for you to enjoy.